Welcome back to the cityCURRENT Radio Show. I'm your host, Jeremy Park. We're honored to be with our cityCURRENT partners who do amazing good, helping you to transform your wealth into creating a legacy and impact. And so we're here with Chris White and Brian Reichenbach. Chris is the CEO and co-founder, and Brian is the COO and co-founder of Chronicle Partners. How are you two guys doing?
Doing great, awesome. Jeremy.
Thanks for having us.
Hey, you guys start with some fun, man. You guys do amazing work. And so we get to talk about financial planning, legacy, impact, philanthropy. We cover some, pretty broad scope here, but let's start, give a little background for Chronicle Partners. So give some history and some context.
Yeah. Thanks again for having us, man. As you were doing the intro, it would be cool to have you here in the office when we're meeting people, just to do our intro like that every time. Chronicle Partners, we've been doing this for close to 15 years now. Big picture, we're an independent investment and wealth advisory group here in Franklin, and our specialization and our focus is on the deep financial planning and legacy planning and helping folks figure out where they are today, where do they want to be, and then using a really high touch client service model with deep financial planning to help them get there. So we engage in that investment, asset management, and then also business strategy. And really at the end of the day, Jeremy, we're focused on loving on people, helping people, serving people, and really helping them make that impact that they desire to make. In the process, we get the chance to impact folks, but to help them develop a legacy. In our context, legacy being the personal legacy, the financial legacy, a business legacy, a charitable legacy, and getting to help them put that together with intentionality and develop something they're really proud of that they can pass down to generation. So big picture, that's kind of what we do.
Yeah, and I think it's one thing to make money and have money. It's a whole nother to keep money and to grow money. And especially like you said, to be able to do something special with that. And obviously for different people, that means different things. But having someone who can walk alongside, who can ask the right questions, put together the right plan, but really be there as an advocate to make sure that you're making all the right moves to do something really meaningful. And I feel like that word impact really stands out. But when you're sitting down for the first time, talk about some of the questions you like to ask, talk about some of the things that you're looking at that go above and beyond just the numbers and the cents.
I'll take the first pass, and Brian, please chime in here. This is fresh in my mind. We had a first meeting with someone this morning, and really, again, to go back to how I introduced our group, we want to find out where people are today. We want to figure out where they want to be, and then we can develop a plan to help them get there. And so our questions, we're goal-based planners. So we're focused on we're focused on helping people get to those goals and those desires. And so our questions are around that. What are your goals? And there's questions that come off of each question, right? Okay, great. Tell me about that goal. Tell me about why you want to have the second home. And really looking towards these goals. When do you want to make work optional? And we talk a lot about risk, volatility. But again, it's all in the context of their goals. And we drill down and spend a lot of time in that. This morning, we were visiting with a business owner, entrepreneur, and a lot of our conversation was about this person's business and where do they want to be with that business? When do they want to look at a transition or a transaction? How are they positioned today to get there? What kind of tweaks and changes will we need to make and help them make to get there? So depends on the context of the situation, but again, they're all kind of based around the goals.
Yeah. Brian, dive in on your end on just some of the things that make you all a little different in terms of your vantage point, and then we'll talk about some of the market and what's going on. But what stands out in your mind in terms of the things, your approach that's different?
Jeremy, I think you've hit on a good few pieces already of focusing on what questions you're really asking. Because so much of our industry can get bogged down in the products and the growth and the investments, et cetera, et cetera. And really, those aren't the important things. Nobody has a goal to, grow 10% a year or to have an annuity or, do X or have this fantastic tax strategy. The goals are very personal. It's, I want to do this with my kids. I want to do this with my spouse. And I think that is, in some ways that does even help us differentiate, of just really drilling into, let's figure out how we can really be intentional. Chris said goals-based. I like to use the word possibilities-based too, because, what we decide we want to do when we're 30 or 40 can be really different than when we're 50 and 60. So, making sure that we continue to give ourselves options as time goes on, as our goals and our dreams evolve is really valuable. And again, having someone to sit and walk through those things with you, because most people just can't do it on their own or do it with their spouse. It's a challenging thing to do on your own. So, being intentional, having those conversations that you're generally not going to have. And then we get to, identify some opportunities from a tax strategy where we can save you some money. We can, make some charitable gifts that we want to make and do it really efficiently. Frankly, that's another one too. We spend a lot of time, most of our clients have charitable intention. And that is one of those areas where you can do it really, really efficiently and maximize your impact and help a whole lot, however you want to look at it. You can save yourself some money. You can help out a whole lot more people and make a deeper impact. It's two sides of the same coin. But not enough folks in our industry really focus on that.
Let's stay on that thread, because I think that's an interesting one to stay on. In the past, we've interviewed you. You've shared some really creative and innovative ways that people can give and take advantage of it and really create some bigger impact. But give me maybe one example of something that stands out to you in terms of just whether it's a specific way to go about things, a mindset, but just when it comes to the charitable efforts, something that you want everyone to know in terms of how they can leverage that.
I think the most important thing is to start with what you're really looking to accomplish giving, because we're usually not trying to change the giving behavior of people. Sometimes we'll go through this and we'll end up, giving more because they realize that they can give more, which is great. But more often than not, it's I'm giving X amount of dollars out of pocket, and we realize, what, we could give through our retirement account, or we could give through our business, or we could utilize a donor advised fund, et cetera, et cetera. And again, usually that means we're saving some tax dollars or we're giving some more money away. I think, again, when you hit a certain age, giving out of your IRA almost always makes sense, because you're literally just not going to realize those dollars as income. Most people are given something, and they're just they're not thinking about it. They're just giving. But spending a little time to walk through what you want to accomplish, you can really maximize your impact that way.
Yeah, I think like anything, knowledge is power, and just being aware of the different ways that you can leverage it. Knowing the end goal, it's like, here's what I want to accomplish. Okay, now sitting down with someone, here's all the different ways you can do it and do it more efficiently and more effectively, and in the end, give a lot more. So I think it's it's always beneficial to have that advocate, but the knowledge is so powerful. Chris, what would you add to that? And then we'll switch over in terms of the philanthropic side.
The one thing that I was thinking about is that a lot of people, because this is the way that they've always done it, they've always given cash. And your savvier investors will also understand that they can give highly appreciated securities. So stocks, mutual funds, ETFs that have done well over time. But even some of the savviest investors don't know that you can give away portions of your business, for instance. You can give away real estate. And there are massive, massive tax benefits from that, which is a secondary to the impact that you can have with those dollars because you've not paid that additional tax. And so that's something that we really want people to know, is that stroking the check to the charity is a wonderful thing, but there could potentially be more beneficial ways to do it, whether it's more money in your pocket, or it's more money in the charitable organization's pocket, there are other ways that you can potentially do it and maybe make a bigger impact.
Yeah, awesome advice. Talk about collaboration, breaking down silos. I think this is another aspect that makes you all unique, is that you work with a lot of different specialists to be able to break down silos and in the end, really help the client with the best end results. And so talk about collaboration and breaking down silos.
Yeah, this is, so collaborative is one of our core values as a team. So we take it very seriously. I'll share with people that Brian and I are very aware when we might start overshooting our skis. We don't want to do that. And so part of the journey that we are on is how can we knock down the silos? So the silos being, you've got the CPA over here, the estate planning over here, the financial planning teams here, your business attorneys over here. And the issue is that folks very rarely are actually communicating. Those silos are exactly that, siloed by themselves. And it is very ineffective and inefficient for the client when we're not communicating. And oftentimes what happens is you play this telephone game. So the thing that you tell this person and that person tries to tell this person, by the time it gets over here, it's not exactly what the first person was saying. So part of our journey and part of something we're passionate about is knocking down those silos, actually connecting with, collaborating with the CPA on behalf of the client. Yesterday, we were collaborating with a banker on the behalf of the client, estate planning attorneys, business attorneys, PEOs. We've identified probably about 20 different professionals that we can connect with on the behalf of a family and or business owner. And so what we do is we just knock those down, literally bring them around the table to pour into those that are sitting in the center of the table to really make a big impact.
Yeah. Carry that forward, Brian, on your end, because when it comes to planning now, you're bringing in strategy a lot of different entities. And so you become this quarterback that is managing a full team for obviously the benefit of the client. So walk us through a little bit of that mindset shift on your end, where now it's not just control of one area, it's quarterbacking a lot. How does that process play out?
The responsibility for us is that we need to know a little bit about a lot of different things. And that's important, because otherwise that responsibility falls on an individual. And most times, I mean, frankly, like Chris was saying, no one person can know everything. We need to know who to connect with, because the most dangerous person out there is someone that says that they know what they're talking about and they really don't. So, and I think a good, the most, generally the more complex situations are when you're getting into a business owner, because then your professionals that you could be using multiplies from maybe 3 or 4 people to, it could be a dozen. I mean, it could be 2 dozen. So you can have so many different people out there. I mean, juggling all those different professionals can be a full-time job for that one business owner. And obviously they don't have time for that. They're a business owner. So, even on a simple scale, even yesterday, I was meeting with a client and we were talking through some charitable giving or some distributions from retirement accounts and just the best ways to merge those different things together, and having a really clear picture of their tax planning is really important. So being able to put in a phone call to their CPA and have someone that's going to pick up the phone and answer some questions is very important. The nightmare scenarios for most individuals revolve around estate planning. The worst situations, which really can happen more often than you would think, and it really is scary, of a beneficiary on a retirement account or bank account or whatever the case is doesn't get updated, and they were divorced 10 or 20 years ago, and an ex-spouse inherits an account that an individual did not want them to inherit. So little things that aren't little really do need to go into motion. So you'd be shocked how often folks will do everything that they should do from an estate planning perspective, fill out the right documents, have everything in place, and then not retitle things to a trust, not retitle a beneficiary designation. And that makes all the difference in the world. You can have the best documents, the best professionals in place, but until you actually have the momentum to see every I dotted and T crossed, it's not being done correctly.
Yeah. Well, like anything, the devil's in the details, and exactly like you're saying, having someone who's laser focused and can pull these different pieces together and say, here's a detail that might be missed. Let's go in, and I know who to call and get it fixed and get it corrected. That's huge. Right. Let's switch over and talk about markets, because I know that obviously with the pandemic, there's been a lot of volatility and up and down, a roller coaster ride, but having a plan in place gives you long-term perspective. So how do you all look at the markets, where we are? What's your general sense of kind of the markets?
So big picture, obviously we're a little more than 12 months out from the big decline of COVID. You know, at the start of last year, the market has been on a tear. I mean, there's no two ways about it. The stock market has been just performing extraordinarily well. From a more global perspective, the main forces at play now, we are, from a historical standpoint, we're very likely at the tail end of a bull market. The stock market has had a few, I'll use the word hiccups, and they weren't hiccups at the time, but you know, COVID and a few other things over the last more than a decade now. But the market has been on a very significant upward trajectory since the Great Recession in 2008. So, you know, usually a bull market can run anywhere from 12 years to 15 years, 17 years, and I'll let Chris talk a little bit more about that. But we're 13 years into a bull market now. So at some point, we would fully expect to see that slow down. That could be this year, it could be next year, it could be 5 years from now. You know, and that's where we get into, we never know exactly when that's going to happen, because there is a lot of momentum behind the economy right now. There's a lot of pent-up demand from COVID. So all indications in the short term are really positive for the stock market. But obviously, this is not, you know, too macro advice. You need to be focused on your own situation and be aware of the risks, you know, of the equity markets, because things can change really quickly and we can see a decline really quickly. The other pieces that are important to know, we're in an inflationary environment now, and we're in a rising interest rate environment. So those two factors together make it unappealing to invest really conservatively. Your bank account isn't paying you anything. Your money market, your CD, you know, those conservative investments really aren't paying you anything. So market forces are really, in order to grow your assets, we're being forced to invest in assets that are more volatile, more aggressive, whether that's the stock market or real estate or some other alternative investments. You know, we're being forced to take on some risk and volatility to have growth. So a rising interest rate environment for the bond market isn't very appealing. And we'd expect that bonds over the next handful of years probably aren't going to see a lot of growth. So again, this isn't, there's no advice to be taken on a global scale. Every individual just needs to take a hard look at their portfolios, think about how much volatility they're willing to take on, and just know that you're probably not going to see the gains out of your bond portion that you've seen over the last 20 and 30 plus years. But at the same time, that doesn't mean let's go invest whole hog in the stock market, because that really ratchets up the risk that you're taking on.
Yeah. Well, but I think it's important just to have perspective on, kind of like you said, where we are with the bull market and timing, and just understanding globally what's going on, so that, like you said, you can make informed decisions. At the end of the day, that's what it's about, based on your plan and risk tolerance and the whole 9 yards, and where you are, your age, your dynamic. There's so many factors, but understanding at a broad level what's going on is really important. Chris, what would you add to that?
You know, one of the things that we've learned over the years of doing this is the importance of having a plan in place. What we have seen over the years is folks, when they don't have a plan, the ups and downs, the ebbs and flows of the market generally will spook people significantly when they don't have that plan in place. But when they have that plan in place and they have those goals, and as Brian said, those possibilities, when they have those in front of them, and they have a well-constructed, comprehensive plan that's not only looking at the retirement and the investments, but also the tax planning, estate, the charitable, the insurance, all the 8 pieces of the comprehensive plan, it's all working together. And when they have that goal in front of them, and they know that the plan is in place and they can follow that plan, the ebbs and flows of the market generally are less spooky. Because when we're discussing risk on the front end with folks, and then we continue to talk about risk and volatility as we continue to serve, we are setting those expectations of, hey, look, this is what's happened historically. This is where we are today. Here's a snapshot of what could potentially happen moving forward. And taking all of this information, we build proper expectations around that plan. So when the market declines 34% in 33 days, like it did last February, March, and the market being the S&P 500, we didn't have a lot of folks actually calling us. Now, we called every single person that we served in that process to be proactive, but we didn't have people knocking down our door because we had spent a lot of time in the front end and over the years developing the plan, managing and providing proper expectations. And they knew that this market decline was not something that was going to disrupt their plans because we'd already factored that in the beginning and shown them how things potentially could play out over time, given a lot of variables. So I'm just always reminded when we talk about the markets, Brian and I can sit here all day and give historical data on where we are and where we think we're going to be moving forward. And I think that's important, again, from an expectation standpoint. But at the end of the day, the better planning that we do, it's going to help us have a little bit more smooth ride potentially, and not as much of an emotional roller coaster that these markets sometimes put us into.
Yeah, very well said. We'll wrap up. You can't talk about plan without knowing where to go to create that plan. So where do we go? Website, social media, phone number. Where do we go to learn more about Chronicle Partners?
ChroniclePartners.com. Just very simply is a great way to find us. We have all of our contact info on there as well. Our emails are very simple. It's Chris W. at ChroniclePartners.com, Brian R. at ChroniclePartners.com. We are on Facebook. We're on LinkedIn as well. So yeah, those are the places to find us. We have phone numbers too. So
all online, just you'll
yes.
be everywhere online. So Chris, Brian, thank you for all you and your team do. Greatly appreciate it. Thank you as always for being cityCURRENT partners as well. Thank you for coming on the show.
Thanks, Jeremy. Yeah, super honored to be here. Thanks, buddy.